does take us to our talk of the tape. Can you trust the bounce, and how long can it last? Let's ask our experts. Stephanie Link, Hightower's chief investment strategist and portfolio manager. Adam Parker is Trivariate's founder and CEO. And Shannon Saccocia is the chief investment officer of Neuberger Berman Private Wealth. Good to see everybody. All three are CNBC contributors. Stephanie, I begin with you. Wow, what a week.
Oh, I know. Exhausting. Absolutely exhausting.
What do I do?
Well, we talked in January, we expected more volatility because just this year alone, because we don't have the fiscal stimulus tailwinds that we've had over the last couple of years. That was that, right? I was expecting kind of slower growth and a little more choppiness. The tariffs, though, obviously much worse than expected, and the headlines, the day-to-day chaos is really wreaking havoc on confidence in general. So I get why the market is down. It feels worse, though. The S&P is down 5%, but the Russell 1000 growth is down 9%. Tech is down 12%. Industrials are down 13%. Discretionary down 18%. So it feels pretty bad underneath the surface. Oh, by the way, and value has hung in there. So if you're a value manager, you don't feel as bad as a growth manager. I'm kind of a blend. So I think we're not out of the woods. We have to get past tariffs, and we just don't know what the time frame is going to be. That all being said, Scott, so maybe we go from 3% growth in the economy to something like 1.5%. I'm just not in the recession camp, not yet. And that is because I'm looking at some of the data, especially on the consumer side, which is the bulk of the economy, as you know. Look at the jobs numbers this week that we got in terms of jolts better than expected, initial claims better than expected. Wages are anywhere from 4 to 5%. Spending is still at 2.4. So I know we're seeing a slowdown, and I know we got some pretty disappointing results from the airlines and the services part of the economy, but I don't think it's collapsing to the point where we're recession. Yeah. And I still think you can see double-digit earnings growth this year.
People I talk to who make their living making a really good living doing this Wall Street stuff, and their support, even the supporters of the administration and the policies, tell me it's the rollout, it's the messaging, it's made them more negative than they thought they would be, they ever imagined that they would be 50 days in?
It's a huge surprise. We all knew tariffs were coming, but we kind of thought they wouldn't be nearly the amount. I mean, 200% today. Talking about some of the numbers that are coming out are absurd. So we don't know if this is a negotiation by the Trump administration, but we know more is coming, and that will have more of an impact on earnings than we initially expected. I mean, I initially thought maybe 25, 10, or 20 in China, Mexico, Canada. I initially thought maybe it'd be a 5% hit to earnings. Now you're talking something like 7-8%.
Well, you have David Solomon, the CEO of Goldman Sachs, Shannon, speaking of that on this earnings hit. If you want to call it that, what might happen, we'll see. Quote, the discussion around tariffs in particular may weigh on corporate sentiment, and the impact on bottom lines could be significant, right? Bottom line, earnings. That's what we need to worry about.
Well, I think, Scott, that you hit the nail on the head. So we talk a lot about, you mentioned consumer confidence at the top. We've talked a lot about, where is the consumer? Where's the resiliency? We continue to look at non-farm payrolls data. That's pretty supportive of that consumer. It's really about business confidence. And if you think of the view, our view in particular, for at trend or above trend U.S. growth this year, it was the foundation of that was improving business confidence, hiring, CapEx, and inflection higher in the industrial cycle. Those are what is on hold. And so I think this disruption around the tariffs, there's two things. You have to create a broader range for your growth expectations, bring those down a little bit on the lower end. You have to create a broader range around your inflation expectations, bring those up on the top end. But that's not just the monetary impact of tariffs, Scott. It's about the confidence and the uncertainty, and that's weighing on this potential infusion of growth into the economy. And so businesses right now, they're coming out of this period and saying, well, listen, we're constructive longer term, but right now we don't necessarily want to make that announcement about hiring or that announcement about a new project because it seems very unclear. And so what we're watching is we're looking at announced layoffs in the private sector. We know what's happening in the public sector. And so there are going to be a number of things that you're looking at in terms of determining, how long this will last for, which was your question. But I think it really comes down to what businesses are saying and doing versus the consumer, which is different from where we've been over the last couple of years.
Adam, this is an expectations and positioning game. And both are offsides from where people came into the year thinking, and we're still going through this process of adjusting both. The problem is we don't know where to fully adjust both because we don't really know where all of this is ultimately going to go, whether this growth scare manifests itself into something worse or does not.
Yeah, look, I mean, every part of me wants to get bullish again, right? You know, we had the good call of saying, you know, the market will be down in the first half and choppy with concerns about tariff and all that. And, you know, now we've seen a lot of people who were bullish at the beginning of the year throw in the towel and get bearish. And I really want to do it, right? But I can't. And the reason is because I don't think we've seen enough of a blow-off on the positioning. If you look at the financial conditions index, you look at the VIX, you look at retail flows, like they're not showing, yeah, there's a couple multi-strat pods that blew up and degrossed, but you're not seeing a ton of that. And I think the fundamentals, you know, you guys were just talking about spot on. You know, Steph, I think, nailed this the last couple of quarters when she said, hey, there won't be a lot of negative pre-releases in Jan 1 or October 1. I think this time in April there could be. I mean, if you look at the companies that were talking at big conferences in March, a lot of things are slowing. And so I think this is more than a growth scare already. This is actually like a growth slowdown. And so the question is, will we get negative guidance in April? Will we see stocks guide down, a company's guide down and the stocks don't go down? If I see that behavior, then I'll probably want to get more risk on. But until then, I think we have to play a little bit more defense than offense because I don't think the fundamentals are, you know, likely to V-shape recover like they have in previous cycles.